think over the next couple of months, we're probably going to see renewed volatility in the markets, and for that point of view, the idea of maybe buying on the dips that we've seen in, say, equity markets, and I suppose the euro-yen and the dollar-yen trade are probably not as open as before. So I would say shorter term trends are probably going to be important rather than the longer term ones over the course of the summer. So we'll be maybe more actively trading the markets rather than a buy and hold scenario.
Well, at the moment, the dollar-yen is the centre of the FX universe, so really you've got to be looking at what's going on not only in the US but also in Japan. Now, next week we have the latest FOMC meeting, and there's been an awful lot of market chatter about whether or not the Fed is going to sort of lean towards some form of tapering package. Now, I think it's very unlikely that that will happen. I don't think the Fed will announce a tapering package, but at the moment, given the rise that we've seen in dollar-yen over the past 6 to 9 months, the recent pullback is not surprising. So I think with respect to dollar-yen, as long as we don't fall below 90, then I think we can go back and retest 100.
I think the foreign exchange markets right now are being dominated by central bank policy. The two main things moving the market right now are Fed policy and Bank of Japan policy. Will the Fed taper off its quantitative easing? If so, when is that going to begin? How quickly are they going to do it? On the other hand, what's going to happen with Japan's quantitative easing? What are they going to do in reaction to the recent fall in dollar-yen? Are they going to ever increase the amount of bonds that they buy? What's going to happen with the volatility in the Japanese bond market, the Japanese stock market, which has been falling very, very sharply? I think you really have to look at the central bank policy and how their reactions feed through back into the market.
Well, I think they really need to be looking at dollar-yen. Dollar-yen is the most volatile currency cross out there at the moment. It's controlling everything. If it slips below some key levels back towards 90, that's going to be a huge blow for those dollar bulls out there.
A way that they can make their trading system consistent, because without money in trading is made with consistency. So without consistency, the trader really has nothing. Some traders go and execute one system and then they go on to the next one and the next one, and it's just absolutely pointless. So you need to be consistent in your approach.
Do your own analysis, take everyone else's with a pinch of salt, and always use stop losses.
It's very, very important to have rules that you stick to, and charts, technical analysis are very useful in guiding your trading plan in that regard. So what I would say is that as long as your risk management is spot on and you're very rigid and disciplined about how you trade, then that's the best way to go.
This is one of the most difficult things, I think, but also the most necessary. One of the reasons people lose money is because they can't, their ego gets tied up in their trading. You have to remember this, you aren't trading to prove that you're smart, you're trading to make money. So you just have to remain calm. You have to set a stop before you enter a trade. You have to decide how much money you can lose in the trade. And when it hits that level, if it hits that level, you're out.
It can be difficult, but always stick to your trading plan. Using some sort of automated strategy, a bit like looking at candlesticks, particularly looking at technical analysis, so going with the trend rather than just your gut feeling. Combine that with fundamental analysis, and I always think that helps to remain objective and keep your emotions out of the market, really.
The best way for a trader to remain objective, and the method that we use, is that you do like a very short meditation actually before you start trading. Completely calm the mind down and read some sort of an affirmation that you'll reread and reread over and over again, and that will keep your mind calm and help you to remain objective in different market conditions.
Know your market and be aware of the relationship between the FX and bonds and equities. There's no substitute for education, and of course you can trade on a demo account, but there is no substitute for the real thing. So small trades, using stop losses, and of course ascertaining where your profit targets are going to be is very important when you're starting to trade.
Get educated. Learn about the market that you're looking to trade in, because one of the most common mistakes people make is they go from a demo account where making money is probably very easy because you don't have the fear factor, to then trading with your own money, and then suddenly all your emotions start to run riot because the trade that you thought was an easy one on the demo account suddenly doesn't become so easy when you're trading with your own money. So go on courses, learn about charts, learn about technical analysis, read the FT, understand what drives financial markets, and then that's a good starting point. I've been doing this 20 years and I still don't have it all figured out.
The market is like the rain or the snow. It doesn't think about you. It doesn't care about you. It's going to rain when it wants to rain. So you have to adjust to the market. You may have an idea. If it's wrong, you got to realize it and get out. Nobody ever went broke taking a profit. On the other hand, people do go broke riding their losses. I think the most important thing is not to get emotionally tied up with your position, and to cut your losses as soon as you can, not let them increase, and preserve your capital.
Set up on a demo, and also only trade what you can afford to lose. The idea with trading is that you will lose. No FX trader out there will have ever had a complete winning streak without any losses at all. That's just not the way it works. Just make sure that you can afford it, have a good risk-reward strategy, so that at least, so that as long as you can lose 50% of the time, but you still make money.
Consistency. Consistency is the key to everything. Execute your trading system consistently, and that will lead to longer term profits. You also need to keep accurate logs and statistics and journals so you can analyze your stats, so you can see exactly what you need to do next.